In the realm of high finance, there are stories that shape our understanding of the industry's triumphs and failures. One such tale is that of Lehman Brothers, a story of ambition, greed, and the cataclysmic consequences that followed. Join us as we delve into the untold story of Lehman Brothers. Act 1: The Rise to Power. Our story begins with the Lehman Brothers, Henry, Emmanuel, and Mayer. In 1850, they started their journey in the humblest of circumstances, running a small store in Alabama. Driven by their ambition, they seized opportunities in the cotton trade and relocated to New York City. Lehman Brothers swiftly grew from a cotton trading business into a prominent investment bank. They navigated the challenges of 2 world wars and played a crucial role in financing the post-war economic boom. Act 2: The Fatal Flaws. In the early 2000s, a housing boom gripped the United States. Lehman Brothers, like many others, saw an opportunity in the burgeoning subprime mortgage market. Lehman Brothers dove headfirst into the mortgage-backed securities market, packaging risky subprime mortgages into complex financial instruments. As the housing market began to show signs of strain, cracks in Lehman Brothers' foundation started to appear. Act 3: The Collapse. As the subprime mortgage crisis intensified, investor confidence in Lehman Brothers waned. Rumors of their exposure to toxic assets began to circulate. With mounting losses and a lack of liquidity, Lehman Brothers found itself on the brink of collapse. In a pivotal moment, potential buyers, including Bank of America and Barclays, withdrew from acquisition talks. On September 15, 2008, Lehman Brothers filed for Chapter 11 bankruptcy protection. The repercussions reverberated across the globe, shaking the foundations of the financial system. Act 4: The Aftershock. The bankruptcy of Lehman Brothers sent shockwaves throughout the global financial system, leading to a full-blown crisis. Credit markets froze, stock markets plummeted, and unemployment soared. Governments and central banks scrambled to contain the damage. As the dust settled, questions arose about who was to blame for the financial disaster. Lehman Brothers executives faced scrutiny for their risky practices and lack of transparency. The failure of regulatory bodies to identify and address systemic risks also came under intense scrutiny. In the aftermath of the Lehman Brothers collapse, governments and regulators enacted significant reforms to prevent a similar crisis from recurring. The Dodd-Frank Wall Street Reform and Consumer Protection Act, passed in 2010, introduced stricter regulations on banks, increased transparency, and established oversight mechanisms. The effects of the Lehman Brothers bankruptcy extended far beyond its immediate aftermath. The global economy struggled to recover, and many individuals and businesses faced long-lasting financial hardships. Trust in the financial system was severely damaged, and a culture of caution and risk aversion permeated the industry. Act 6: The Legacy. The collapse of Lehman Brothers marked a turning point in the history of finance. It forced institutions to reevaluate their risk management practices, encouraged greater transparency, and promoted a more cautious approach to investing. The untold story of Lehman Brothers reveals the dark underbelly of ambition and greed in the financial world. It serves as a constant reminder of the importance of ethical practices, robust regulations, and responsible risk management. Though the scars of the Lehman Brothers collapse still linger, the lessons learned continue to shape the financial industry, with hopes of creating a more resilient and sustainable future. If this video satisfies your curiosity, don't forget to leave a like, subscribe to our channel and share this video to your friends. Thank you for watching, and we'll see you in the next video.